Good morning, all. I don't know, I can't say let me stand on a already existing protocol because it's always good to give honor to whom honor is due. And that's our director and every other distinguished members and my graduates, because we are still graduates. We've not graduated, you know. We are still in the process. We'll do everything we end today. So thank you very much. I'm giving only 20 minutes. You know, most of us, all of us are business, as in we are into different businesses in different fields. And definitely one of the things we are taught is that there are external factors that affect your business. And one of them is the law, the legal system in any particular area, or the law that governs businesses in that area. We all know that Nigeria has, in June this year, our president signed a new tax law. And now Nigeria has a new tax law. It's made up of 3 acts. Thank you very much. Our topic says Nigerian tax reform laws and implications. So, due to time, we are going to show just briefly what it's all about. The Nigerian tax law reforms and implications. The first slide has to do with is 2025. It was this year that it came into the president signed it, and then next year to take effect in 2026 on the 1st of January 2026. It's important that we know how it will affect our businesses. And you know, this particular tax law even has to do with people that earn income, maybe people that are living outside the country, non-resident persons, individuals, but they earn income one way or the other within Nigeria. The reform is made up of 4 acts in one book. I brought this just for us to see. This is a compilation of all a unified tax law of Nigeria. In the past, we had many tax laws. The capital gains tax has its own book. The personal income tax has its own. The Federal Inland Revenue Service has its own, and all other taxes. So at times, for you to practice practice tax in Nigeria is almost difficult because you need to start getting all those books and then reading them one by one. But one thing that this particular act did is that it unified all of them into one booklet. And in this law, we have 4. One is the Nigeria Tax Act. One is the Nigerian Tax Administration Act. And one is the Nigeria Revenue Service Establishment Act. And the final one is Nigeria Joint Board Establishment Act. Let's go deeply into what all this says. The Nigerian Tax Act unified all the taxes. In the past, we had almost more than 60-something tax heads in Nigeria. And at times, when you come to some states, you find out that there are even more than that 60. There is no kind of tax you will not hear. Double taxation, they don't want to know, but everything is tax, levy, penalties everywhere. But this particular move by the presidency now unified everything that has to do with tax laws into one. This Nigerian Tax Act dealt with all the taxes. Is it personal income tax? Is it capital gains tax that is somehow emerged into the personal income tax now? That's for next year. Is it the stamp duties? Is it the Petroleum Act? Is it excise duties? All these laws that has to do with tax, they are all provided for in the Nigerian Tax Act. Then let's go to the next one, which should be the Nigerian Tax Administration Act. This one has to do with how do you administer these taxes. In the past, many areas, at the federal level, the Federal Inland Revenue Service was in charge of all taxes that has to do with the federal government, while the state IRS handled the state taxes. For us to have uniformity in procedures followed in administration of this tax, that is why the Nigerian Tax Administration Act came into existence. And it unified all the processes, both from getting your teams, both from rendering your returns, both for your personal assessment, both for everything that has to do with enforcement, everything that has to do with penalties, everything that has to do with all the processes that you have to undergo in respect of actually enforcing this tax act. That is what the Nigerian Tax Administration Act is. Then the Nigerian Revenue Service Act, what we have presently now is in Federal Inland Revenue Service. By next year, it will no longer be Federal Inland Revenue Service. It will be Nigeria Revenue Service. That's the new name it will take. And few adjustments were made with respect to the structure of that body. Then the Joint Revenue Board made provision for the Joint Revenue Board itself. Now, what we have is Joint Tax Board. But from January 1st, 2026, we will now have the Joint Revenue Board. Then the same act made provision for Office of the Ombudsman. The Ombudsman is an impartial setup that will help taxpayers in handling their affairs. Assuming a particular IRS gave you a bogus demand notice, an amount that you think is just anything, they just woke up and gave you you have the Ombudsman to speak for you. And they're meant to be partial. They're not to be partial, impartial set of people. So as in, it will be set up in a way that people can have that confidence to approach them, because they will always be ready to fight the IRS and revenues, the Federal Inland, the Nigeria Revenue Service. In that particular act, you also have the Tax Appeal Tribunal. Many of us don't even know that there is a tribunal specifically maintained by the federal government to handle tax matters. That is the Tax Appeal Tribunal. It still remains. Then when you now come, these are the four main, and I've been able to explain as in the main thing that those acts are supposed to provide. The next thing, we should now go to maybe main features of this change. The number one thing is that it unified all the taxes in Nigeria into one booklet. Not even a booklet, because the Nigerian Tax Act has just about how many pages. So everything that has to do with tax in Nigeria are contained in that Nigerian Tax Act. Although we are still waiting for the regulations, but the regulation is just as in procedural, because some of the sections in the Tax Act or Tax Administration Act made provision that regulations as to how this and that should be done will be provided in the regulations. They will be out before the end of this month. It reduced corporate tax rates. Exemption of companies with turnover. This particular act now made provision for what you call small companies. And the small companies are companies that their turnover should not be more than 100 million. Then their fixed assets should not be more than 250 million. These are people that are classified as small businesses. And they are tax-free. Tax exempted. They don't have to pay company income tax. They don't have to pay capital gains tax in form of which is now submerged into personal income tax. They don't have to pay even the development levy that have been unified. They don't have to pay any taxes at all, provided they remain within that threshold. It increased capital gains tax for corporate entities from 10% to 30%. Progressive region. It made a provision for tax, as in with respect to personal income tax. In the past, even somebody that earns, because the president's minimum wage was 70,000, so somebody that earns 17,000 a year was liable to tax. But by next year, 1st January, it will no longer be that. The threshold has increased. As in lifting up, you find out that many people will be exempted from personal income tax. We still get to that. Why the people that the rich now pay heavy percentage with respect to their personal income tax. It unified procedures in administration of taxes in Nigeria, tax identification number. By now, many people must have been hearing of TIN. TIN means tax identification number. It is compulsory. It's not something that maybe, once you are a taxable person, you fall within the definition of taxable person. It is compulsory. We still get to the penalties. Because one thing I would like people to be aware of is this tax act made provision for enormous penalties. Honestly, the penalties are just too much. And you need to know some of them. It removed FIRS and established NRS. NRS to regulate all federal taxes, which can also assist states. In the new arrangements, NIRS, which is Federal Inland Revenue now, that will now become Nigerian Revenue Service, i.e., they are given the powers to help states in collection of taxes, if the state demands anyway. Establish the Joint Revenue Board, Ombudsman, Tax Appeal Tribunal. Then, because of want of time, let's go. How does it affect individuals? General implications of Nigerian 2025 tax law. I've already said that. The next one, I'm told I have 20 minutes. Implication of tax, of this new tax act on individuals. Please, I'm pleading. It is a must that you have your tax identification number. That is thin. And it is so easy to get. You can just go to the system. The website for Enugu State is www.irs.en.gov.ng. It will take you to the general platform for Internal Revenue Service, and you now click Register Team. The process flows. Remember, by the 31st of January 2026, if you don't register your team, 100,000 naira penalty. Sorry, 50,000 naira penalty. And from that 50,000 naira, that is for the first month. From February, March, all downwards, you now have 25,000 naira. You can imagine if at the end of next year, you are still unable to register your team by maybe October or something like that, how much you pay as penalty. They are serious about that. Individual underpayee and even a private person, you are supposed to file returns. What is return all about? Return has, and there is a serious penalty for non-filing of return. Non-filing of returns is if you are unable to, for individual, you are expected to file your self-assessment before, or not before the 31st of January, or not before the 31st of March for individuals. 31st March for individuals. Then if it is a payee system, people that run payee system, maybe companies, businesses, and all those things that you have people that are working for you, you are supposed to make that filing on or before the 31st of January. The penalty is 100,000 naira for the first month, then subsequently 50,000 naira. Then the threshold for personal income tax has changed drastically. The first range is 800,000 naira. If you earn 800,000 naira, taxable income. Let me explain it this way. That is what we call taxable income. Your taxable income is not all the income that you... Remember, every source of income that you get are subject to tax. I believe we understand that. But before you get to what you call taxable income, you must have removed some allowances. If you are into pension, if you have a premium that has to do with life insurance or that of your spouse, your rental income, the government decided to give everybody. My executive chairman will always tell you that government is now paying 500,000 naira rent for you. How does it apply? If all the things that should be removed in your income are removed, maybe you are into health insurance, you are into housing insurance, and you have a premium, and then the next thing is that the law says that 20% of your rent should be removed, or 500,000 naira. That means definitely it's going to benefit the poor. And at the end, if all those allowances that are removable by this law are removed, and your annual income still stands at 800,000 naira, that is only when you can be liable to personal income tax. If not, it should not be below 1.3 million. And we know that many people fall under this, because some of these says girls, or even some teachers in some of these schools, or the rest of it, they don't get up to such amount per annum. The next level is people that get 2.2 million is 15,000 naira. Next is 9 million, 18%. Sorry, 2.2 million is 15%, not naira. Then next is 9 million, 18%. Next is 13 million, 21%. Next is 25 million, 23%. And if you earn more than 50 million naira taxable income, when all the deductions that should be deducted are removed, then it's 25%. That means the rich will be charged more. And many poor people will be exempted from tax. It's a great privilege, and we hope that it will work out. Capital gains tax is now computed as personal income tax and is now based on the personal income tax rate. In the past, capital gains tax will be 10%. By capital gains tax, we mean when you sell something like assets or things that you sold and you got a reasonable amount of money, it's 10% that you are supposed to pay. But now, there's nothing like that now. Everything is now submerged into personal income tax, and it will now depend on the threshold in which your income falls. That will determine the percentage. Whether it is the 15, whether it is 18, whether it's 21, whether it's 23 or 25%, depending on the threshold you belong. Deductible allowances are rent relief, health insurance, pension, housing, premium. And one thing is that we need to be very careful, because for some time now, people are very happy. Yes, I'm going to get rent relief. That means government is giving me 500,000. There is condition. And that condition is that you must give the Internal Revenue Service every information they need with respect to your landlord. His full name, his address, his phone number, and if possibly, what he does for a living. Why do you think government wants that? So that we can charge that income. Because as a private person, you don't have powers to withhold tax from the rent you are supposed to pay your landlord. So, but when you give us that information, we can now go after your landlord. And if you don't give the information, you are not entitled to that relief. And you must apply for that relief in writing. You must apply for it. If you don't apply for it, it will not apply. If you apply for it and you give the necessary information that are needed, then that will be considered in computing your personal income tax. Income, profits or gains of non-resident persons accruing in or derived from Nigeria are now chargeable to tax. In the past, those that are outside the country, they will tell you, hey, I'm a non-resident. At times, when you see their businesses asking for, you want information with respect to the person's personal income tax, the person will say, I'm living, maybe somebody business that is in Enugu, I am residing in Lagos. And the residency rule says, wherever you reside, that's where you pay your income tax. Then they will say that I'm residing outside the country. There is no way I shouldn't pay personal income tax. It doesn't operate anymore like that. Once you are getting income from Nigeria, is subject to tax. Then let's go to what we call in companies. This particular act now says that there is a threshold that is called small companies. And there are ones that are, big companies. The companies we are talking about, remember, it can only be companies that are limited liability companies. Because if you are just a business name or enterprise, it means that you will be charged your personal income tax as a person. Because that your business is not different from you. Are we on the same page? If you are operating a business name and your enterprise, it's not different from you. That means you'll be charged normally within the threshold in terms of your personal income tax. But we are not talking about companies that are limited liability companies. That is where you have the small companies and then the bigger ones. The law says that all companies, whether small or not, you must register for TIN and render returns. In as much as the small companies, which the law says it should be people that their turnover is not more than 500 million, 100 million, and then 250 capital, that you are exempted from tax, you still have to get your TIN. Because I hope you are not praying to remain small company for the rest of the years that your business will run. And at times, you may not even know when the turnover surpasses 100 million. And once it surpasses, one thing about the situation of things in the country is that the Internal Revenue Service has every right to get financial intelligence. As in, if they want to know everything that comes into your account, no problem. They have direct access to what comes into your account. That's why I advise everybody. From next year, in short, start practicing this now. Many people that run businesses, they merge their accounts to be one. Even at times when you see companies that are limited, you still find out that some of the directors or whoever feels that he established the business and now added maybe the wife and some other persons as directors, you see that he's still operating one account. It's very, very dangerous. Because you'll be creating problem for yourself. It's better that you create separate account for your business and then separate account for yourself. Don't merge the two. For small companies, you are exempted from in the past, we have some levies, maybe education levy, you have police levy, you have Ezema levies, all these levies. And if you sum all of them up, you find out that almost, 8% or something like that. So the Lord now decided to make it easier for companies. He reduced it to 4% and called it development levy. That 4% now means that after paying your income, CIT, which is company income tax, that is 30% presently, although there is still hope that it may be reduced to 25%, but until that is done, we are operating with 30%. Plus the 4% that is development levy. This one is compulsory for every company that is not small company. A small company is exempted from every and any type of tax you can think of. Why? Just that so that the company can breathe. So that the company can have time to maybe progress. Because once you start with a company now and the next thing is tax is going to affect it. A startup, there's something the law called labeled startup. Ordinary meaning of it is people that just started their business. But they attach the word labeled because you must be accredited by a government agency for you to fall into that threshold. You are exempted from tax. And then if you are into a company that is into agriculture, you are also exempted from tax. Each of them is. The small companies, as long as you are there till you grow. The other ones has to do with 5 years. Then pioneer companies, there's nothing like pioneer status now. This law abolished that. But if you've been enjoying the pioneer status and you are now going into 2026, depending on how many years that is still remaining, you still enjoy that free tax exemption period until that period of your pioneer status expires. 4% development levy is imposed on the accessible profits of all companies, chargeable to tax except small companies and non-resident companies. To ascertain a company's profit or loss from any source chargeable with tax, allowable deductions shall not exceed amount equal to 5% of that year's turnover. Loss to be considered in computing a company's income. In the past, there is something that they call minimum tax. Why do I say in the past? Because we are still practicing the tax regime. We are still yet to start implementation of this. So there is nothing like minimum tax anymore. In the past, they would just say, just do something, at least pay something. But this time around, from 2026, if maybe you're running on loss, you're not liable to pay tax as a company. That's the new position. Then it's important that, I said that there are, if not for anything, please don't forget. If you are here and you've not gotten your TIN, it's very, very important. Then for offenses and penalties, the whole of chapter 4, which deals with section 1 to 137 of the Nigerian Tax Administration Act, deals with penalties. There are so much. One that is very, very serious is if you do business with anybody or any company or whatever business, whatever, that doesn't have TIN, the penalty is 5 million naira. That means that for you to do business with any business name or whatever, any company or whatever, you must to make sure, even an individual, make sure that the person has a TIN number. If you make that mistake, 5 million naira. And people that are living in Enugu State already know that this state is not joking with taxes. So we need to be very, very careful. Then, if you now change, TIN, there are many information that you need for you to get TIN. One of it is your address. If you change your address, you are supposed to notify the Internal Revenue Service Within 30 days, if you fail to notify, that's a penalty of its own. So we need to be very, very, very careful. Failure to notify attracts a penalty of 100,000 naira, and then for that first month, that's after the 30 days, you are entering the next month, 100,000 naira. Then subsequently, 5,000 naira. Failure to file, 100,000 naira for that month. I said for an individual, you are meant to make your annual filing on or before the 31st of March. Then if it is a payee system, on or before the 31st of January. That is the law. Then if you fail as a payee system, after the 31st of January, you've not done your payee return, then subsequently, penalty starts. 100,000 naira from February. And then from March, 50,000 naira downwards. In the same thing, you as a person. One other thing that is really demanding and really, let me not use the word worrisome, is the issue that even if you are working under an establishment and the establishment decides, makes a return with respect to your payee, you as a person, as a staff, is expected to also make your return. Why do you think it's so? Because if what your office reported is just what they are paying you, and that doesn't mean that it's only what they are paying you that you get as income. There are other incomes you get. You may have shares. You may be into crypto. You may be into all those things. Oh, beautiful. You may be into any of those things. So that means you also have to make your own return. Failure to attend to demands. And another thing that we need to understand is that the law made provision for what we call substitution. By that substitution, it means that assuming I want to ask Mr. A has a demand notice, a tax liability that is final and conclusive. Final and conclusive means you are given that demand notice and you didn't object. And that demand notice is not in appeal in any court. That the tax authority can write to your bank and tell them to give them that money. The tax authority can write to MTN and say, help us to deduct all this money. That's the provision of the law. And then the only thing that they can lean on is the fact that they have powers or rights to object or to appeal against it. That means, and another vital information we need to know is that there is something the law calls fiscalization. That means the government can give you a machine or whatever, technology that will now monitor all your sales and everything you do in your businesses, so that we'll be sure that you are telling us the truth with respect to gains you make in your business. It's very, very... And if you refuse to accept that, it has another penalty of its own. Failure to accept fiscalization is 200,000 naira plus 100% of tax due and interest at CBN rates. Honestly, we don't have time because this tax law is really much. The provision is just too much. But please, if not for any other thing, you have your Bible. This is very, very important if you want to succeed as a business person. It's very important that you get this. If you lack knowledge in it, there are experts in different areas. Make sure you get an accountant that will keep your records. It's very, very important. Make sure you make a lawyer, a tax lawyer, your friend, like me, So I can guide you in some of the things. You don't make mistake. It will help you to evade tax, but avoid tax, but not evade. Tax evasion is criminal, but avoidance is when somebody looks for the loopholes and then be able to protect your business. Honestly, the reform is generally commendable. That's conclusion. Though few issues may arise during implementation stage, for no law is perfect. We are all enjoying to help see to the success of the implementation of this new law. Another area that we need to know is that I don't need a court order for me to come and distrain your business. That's the provision of the new tax law. And it is a serious one. So that means I can wake up any day, just get a warrant and seal your business if you don't pay what you're supposed to pay. With this, thank you very much.